Alright, welcome back to another video. In this video, I wanted to talk about a recent trade we had on in RIOT that we put on for 70-cent debit and closed for $8.88 credit in the span of a week. The idea isn't to talk about the win, but rather my thought process on the trade prior to entering, as well as how I managed the trade till the close and how I would have managed the trade had it gone against me. So let's start by looking at the spread that we put on. On March 8th at around 8:14 a.m. Pacific, I shared out the 50-75 1/3 call ratio. That is, buy one of the 50 call, sell 3 of the 75 calls for the March 19th expiry on RIOT for a total debit of 70 cents. At the time, RIOT had almost pulled back to the 50 MA, and my thought was that I wanted to get some long exposure in RIOT. I'm still bullish on Bitcoin, and also because I like buying pullbacks with the trend. I've always been a fan of the whole strategy of just trading with a trend and buying the dip on pullbacks to the rising moving averages. So one of the things that I wanted to make sure of when I got long RIOT was to, one, make the cost of this trade as cheap as I could because of just my overall confidence in the markets during the time. I didn't want to pay a lot in case I was wrong. And two, maintain some kind of upside directional exposure, basically net long delta on the entire trade at entry. Essentially, I wanted to pay a bit of debit up front. I wanted to be delta positive to start in case RIOT does end up having a super sharp bounce. After all, my bias is bullish on RIOT, not straight up pound the table go ham bullish, but just conservatively bullish. Looking at the chart at the time, my target for the bounce was to the 50 MA at around $50. So naturally, I started digging around in the options chain. First two questions always being which expiry and what spread or what strikes. In terms of figuring out which expiry to pick, I know I wanted the duration of this trade to be at least a week out in time in case RIOT failed to bounce and ends up kind of just chopping sideways as it tries to figure itself out. So I chose the March 19th expiry. For the spread or strikes, I started off by looking at the 50 call, which was going for 338. Of course, this was too expensive for me, so I started to find ways to reduce that cost. What caught my attention was that the calls that were further out of the money were going for a decent credit. Specifically, the 75 calls were going for 89 cents each. And you know I love it when these out of the money options are juicy because that generally means you can put on complex spreads with large profit potential for very cheap. So I started playing around with the quantities for the 75 call, noting that I could either get the 50-75 call vertical for 249 or get the 50-75 1/2 call ratio for 160. And I thought deeply about the 1/2 ratio for a while, was about to put on that trade, but then when I saw the chart of RIOT, I realized, wait, 75 is basically near all-time high. With such a deep retracement in RIOT, what are the chances that RIOT actually tests the all-time high again within 10 days? Probably really low, right? In fact, it might just end up stalling out somewhere around 50 to 60 because there's this huge congestion zone that probably lines up with some fib retracements as well. So I went ahead and tried seeing what the spread would cost if I sold another 75 call against the 1/2 ratio, and seeing that this 1/3 spread now costs 70 cents to put on, I super like the trade. For me to get slapped in the face, RIOT would have to continue upwards sharply for a few sessions in a row, and every day that it doesn't do that, every day that it just crawls up slowly, hangs out sideways, or drops lower is a day of safety in my favor. And with the debit being so cheap, RIOT could tank and I would have no qualms about it. In fact, I almost want it to dribble lower first so that any bounce upwards in the remaining days before expiry would basically only juice up the 50 call and not the 75 calls. Essentially what I'm doing is I'm exploiting this interesting dynamic between the 50 call and the 75 calls, where the 50 call is basically long gamma made cheap via the sale of these additional 75 calls. Another reason that I super liked the trade was the profit potential. The risk reward is absolutely worth both the downside risk and the upside risk. For the downside risk, as I mentioned, it's only a loss of 70 cents. And for the upside, because of how wide the legs are, there is potentially $25 worth of capture. Although I know that realistically, I'll only be aiming for about half of that. But even a third or a quarter of that would already be a decent gain on the debit. All right, so I went ahead, put the trade on, shared it out, and from there on out, it was just waiting to see if RIOT would bounce to the 50 to 75 range and hold, which by nothing but pure chance, it did. By March 15th, RIOT found itself hanging out near $65, and this 1/3 ratio was worth $8.88, roughly 1,168% gain on the initial debit. There was not much management needed at all in the trade, and this gain was good enough for me at the time, so I ended up closing it and locking in those gains. Now, if RIOT had continued to surge higher quickly to 75, say early on in the trade, I probably would have closed the trade at a slight profit and reestablished a position further up higher for for the following week. And I have no problem doing that because there'd be so much juice in the calls that I could once again get a very large wide ratio, probably even a 1x2 for very cheap. Another adjustment that I could have done if I wanted to wait and see if RIOT would settle down without rolling the position out in time would be to cough up the debit to roll some of the 75 calls up to 80 or 85 in the same expiry. Of course, paying a slight debit. Basically finding ways to maintain long delta while staying theta positive and just waiting for that premium to drain. So yeah, this is pretty typical of the types of trades that I like to put on. Find plays where the volatility is skewed towards the more out of the money options, sell those against a closer to the money option, and play that outlier move with short duration so that my risk profile matches that of a naked long option, that I'm basically playing the whole gamma game. On that note, I did end up rinsing and repeating this trade, but for the next week out. After I closed that RIOT trade, I ended up putting on another similar trade. Right now, we are in the 75, 105, 1x3 call ratios for March 26th for a total cost of 28 cent debit. And right now, it does look like RIOT is taking a small break, which is great. I'm watching this trend line. If we can get a solid break above that trend line resistance, it makes sense that the first target would be that all-time high at $80, followed by anyone's guess how high this would go. What I do feel confident about is that the spread will be safe in terms of the unlimited risk to the upside. Given that there's only 10 days left, any more sideways days or down days would be beautiful. And of course, if this thing tanks, whatever, I don't really care. It only costs 28 cents of debit. Another trade that we put on that's kind of similar to this is Roblox, expiring this week. We have the 80, 100, 1x2 call ratio we got for $1.30. I just thought it was interesting that the 100 calls were so juiced up earlier today. And if Roblox went to near $100 tomorrow, meaning that it goes to the short strikes, then this spread will be worth basically what the 60-80 call ratio is worth now, which is about 1075. So the risk reward is definitely there without much upside worries, as there's only 3 days left till expiration. So we'll see how that one goes. All right, so that is it for today. Hope this was a bit enlightening. As always, feel free to follow me on Twitter or join us in the Discord if you want to see more stuff like this on a more real-time basis, where we share our thoughts, our trade ideas, help each other find juicy spreads or setups, or if you just want to chat and trade with us. Otherwise, stay safe, and I will see you in the next video. Cheers.